Let's open it up to questions immediately so we can manage time. Sir?
Hi, it's just a simple question. Just wondering how you should go about valuing your business in terms of investment.
That's a quite complex question, actually.
So I actually was having a conversation with your partner over the break. Maybe a good point to start is one of the things that I tell our companies is that before you can even start valuing your company, you need to know how much you're raising. A lot of companies don't even know how much money they need. And when you break out how much money you need to break it out into milestones. If you look at the slide that I had about this one, you see how much money you're raising and for what. Your milestones are basically tied to that. So you're not going to go raise $3 million when you don't even have market validation. You're going to go raise 500K. So let's say you map yourself here first. Where are you in this stage? And that's roughly how much you're going to be raising on average, right? So now that you know that number, now when you go to the market, you can assume a couple of things. There's many ways I could argue how to value a company. You can use discounted cash flow. You can use all these kinds of MBA type things, but they're actually not very relevant for startup valuation. Another way you can do it is by saying, what is the average amount of equity taken by investors for that amount of money, right? And it's going to look like a bell curve. On one end of the bell curve, you'll probably not exceed 50% ownership for any money that you raise. And the other end of the bell curve, I don't think any investor is going to be willing to take a ridiculously small amount of your company for any of the money you raise. So that bell curve gives you a range. So if you divide the number that you've identified there by a range, like 15% or 35%, that gives you a valuation range. And that's one way you could potentially value your company is divide that number by a range, and you get something like my company might be worth somewhere between 500,000 and 300,000 if I'm raising 500,000, let's say 3 million if I'm raising 50 to 100K. That's one way to value.
Yeah, I'd agree with pretty much all of that. I think entrepreneurs often think that there's some kind of magic formula, you know. The theory says discounted cash flow is the correct way to value a business. In DFJ Esprit, we never ever do a DCF. In the previous firm that I was with, Trinity Venture Capital, we used to do a DCF, but as a sort of a sense check at the end after we'd negotiated the deal. And I think what almost all VCs do in reality is they work backwards. They say, okay, companies of this kind trade on the public markets at this kind of multiple. They trade in exits at 4 times revenues or whatever the appropriate metric is for companies of the type. And they say, okay, I think we can get this business to 20 million of revenue over the next kind of 4 years. It'll exit at 4 times revenue, so it'll be worth on exit 80 million or whatever the number is. And then they kind of say, well, okay, how much capital is it going to take us to get there? And based on that, what price do I need to get in at now in order to get a sensible exit? So that's the kind of the processing for investors. I need to make 5x. So what's the entry price? And it may be that there isn't an entry price. Just as Carlos said, it may be that your deal just doesn't stack up at any valuation. But there's no magic formula.
Thank you.
Other questions?
Yeah. I'm interested in your opinion on Kickstarter. It seems like for Seed Camp you're giving 50K investment fund. There are companies that have gone to Kickstarter and have raised 10 times that without being guaranteed. Well, they don't have to give back a share of their company to the investors. Well, because they're not investors, there's people who want to see a product exist because they think it's quite cool. What do you think?
Good idea. If you can get, so 2 things. If you can raise 100K from Kickstarter and convince a whole sea of people that don't know you to fund as a crowd your product or your project, that's great. It's not going to come with anything but money. If you go to a place like Seed Camp, the money is the least of what you're getting. What you're getting is this network of mentors and advisors and the introductions in the US over 4 weeks on Sand Hill Road, New York, etc., that would take you 10 years to do on your own. You're not going to get that from Kickstarter, but if all you need is cash and you can do it, I think it's a great idea. And now there's this, in the US at least, there's new legislation that has allowed the creation of crowdfunding platforms just like Kickstarter, but for equity. And we'll see how they work, but everybody's pretty excited about it. I think it's going to be a royal mess, but we'll see what happens.
An example about something like Kickstarter is Elaine's company up there. She's got a product which is effectively like a to help. Well, how would you describe it?
It's a Febreze for dogs, but it's got a really unique paper packaging.
All right, so let's maybe summarize it as it's a product that is physical and that requires a certain money to manufacture and then is sold immediately right after. Think of the Dodo case, which is the iPad case. Think of like the watch for the iPad, for the, what do you call it, the Shuffle, which was just a strap to put around your iPod Shuffle so it looked like a watch. Anything that's product-based like that, you raise a certain amount of money, you basically go cash flow positive quite quickly. That kind of stuff works really well with Kickstarter. Businesses that require subsequent rounds of funding, like where you're going to end up 6 million or 20 million, that's where you start having to go down the path of VC funding, and that's where like having an understanding of how to structure your business around an equity-funded business it's more necessary to go into a program like Seed Camp than if you're just building a product that you're going to sell in numbers. Regarding crowdfunding, I think it is going to be an increasingly viable way of getting the additional 50K. I think there's two things there. One, if it is something like a product-based type thing, maybe it just ends there. If it is an equity type business that's going to keep on going, it's probably going to be supplemented with a program like Y Combinator or Techstars or something else. But one of the things that they need to sort out is the legal challenges of hurting all those cats which invest in it. I know different platforms are dealing with it different ways, but it does create a legal problem for subsequent investors on how to make decisions when you have like 30 people on the board. Sorry, on the cap table.
One other comment about Kickstarter that I see a lot in the US is startups will use Kickstarter almost as a sort of pre-sales team marketing effort. So they'll basically put a project on Kickstarter for something that they're doing. And even if they don't raise the money, they now have a database of people that have self-identified as interested in that product, and then they turn around and say, we didn't get to the level that we needed, but we'd be willing to sell you this thing, contact us. It's a way to discover a market, basically where your market is.
And it's good data to take to angel investors.
Yeah. Other questions? Yeah.
I'm an angel group based at the Borders, and I thought actually you were quite hard on the Scottish ecosystem. But I would say that one of the biggest problems in Scotland with funding comes somewhere between the seed funds and the Series A that you're talking about there. And the angels are doing a good job in Scotland, I think, and there's some good groups represented here, including Archangel in particular, who are leaders of the pack. But we struggle when we get to the market validation, the market scale area, and that is where the greatest need for funding is, and the greatest problems in Scotland.
Okay, with that, I think I'll do my quick presentation and see if I can ratchet up the level of provocation in the debate.